If you want to make a lot of money trading while not having to be tethered to your computer for hours and hours a day, then swing trading is for you. The big benefit of this one is you could literally sit on your computer for the maximum of 1 hour per day. The other great thing about swing trading, you don't really need to have all of these patterns in your pocket because things happen relatively quickly. Swing trading is over 1 to 5 day period. So you're not going to get an ugly face pattern, a head and shoulders pattern that are really developing. You really need to learn about volume, trend, where your resistance points are, and then just grab engulfing candlesticks and you will be on your way to making more money than you could possibly imagine. So if you've never heard of swing trading before, let me just explain it to you real quick and how it differentiates from long-term trading and day trading. So let's start with day trading. Day trading is when you are making a trade within a 1 day period. So you are not staying in this stock overnight. If you're getting in at 10 o'clock in the morning, you have to be out by 4 p.m. when the market closes Eastern time. Typically, a lot of day trades are going to happen fast. They could happen within a 30-second period of time. Some of them are going to be longer. They're going to be over several hours. But the idea is that you are only in that trade during that day. You do not stay in it overnight. Long-term trading is using a different chart, but this is your long-term play. This is, for me, an ideal long-term play is multiple months. I want to catch a stock while it's in a big uptrend or a big downtrend, depending on which way I'm going, and I just let it run and run and run. Swing trading, however, is a little bit more active than the long-term trading. This is what I call 1 to 5 days. Now, is it always 1 to 5 days? No. It can be 2 days, 3 days, it could be 10 days, it could be 15 days in many cases. But from what I've found, the majority of them do fall between that 1 to 5 day period. I'm going to show you an example here that went over 2 weeks, but it's still a perfect setup for a swing trade. So let's talk about some pros of swing trading versus day trading, for instance. With day trading, you definitely need more capital. If you are going to be marked a pattern day trader, you need to have $25,000. You need to have $25,000 in your account for you to be able to jump in and out of stocks on a consistent basis. That's hard for a lot of people. And frankly, it's not needed. When people ask me how much money you need to get started with trading, I always say, you're really $50. It doesn't matter. As long as you can buy shares, you can get in there. But you need to look at percentage returns because I know there's people out there saying, well, yeah, but how are you supposed to make any money with that? Look at percentages. At some point, you're not going to have $50. You're going to have $50,000. Then you're going to have $500,000. This is something that you're going to be able to use and grow for the rest of your life. So capital, it doesn't need to be there. You can really start with $50 if you wanted to. You could probably start with less if you could find shares that are less money than that. That is a massive pro of swing trading versus day trading. Another big pro, you can let your winners run. So with day trading, my goal was to always just grab 1% per day. I would literally sit down at my computer in the morning and I would say, as soon as I make 1%, I am done for the day. It was a monetary goal that I had, but that always equated to a percentage point. Swing trading, you don't know how long this could go. You could get 30% in a matter of 10 days, which I'm going to show you right here. We had somebody in our community that traded NVIDIA, made 29% just in the month of August so far, all on a swing trade because the setup was just absolutely perfect. But you get the opportunity to let those winners run. You're not going to get that with day trading. Why? Because you have to be out of it during that same day. Another very large pro, there is not as much, I'll say, emotional pressure on you. When you are day trading, if you've never done this before, even if you're paper trading, it is a little bit nerve-wracking. I mean, you literally see your account going up and down every single second. Now, of course, you're going to see that if you're swing trading, if you just sit there and fixate and just keep hitting refresh. I don't know why you would do that, but it's a lot different. You have a little bit more margin of error, a little more margin of safety in there. You can see where the resistance points are. It's a little bit more zoomed out where you can say, okay, I don't need to panic if this thing pulls back $1 on me. If you're day trading, you have to, more likely than not, you got to be out during that pullback because the trend is going to change on you. The trend isn't going to change on you that way when you're swing trading. So it's a little bit more emotionally stable or comforting. It's less quick, which is great. And for new people, I would not recommend just jumping into day trading right off the rip. Start with swing trading, get comfortable with it, then graduate to day trading. Resistance and support points are very, very obvious, or maybe more obvious when you're swing trading. There are many different areas where you can go to, and I'll show you on this chart in a second. This NVIDIA trade is fantastic, but it just shows you it kind of even builds it in there for you. You say, okay, this is where I'm going to sell. Why? Because there's that support level there, or there's that resistance level there, depending on if you're going long or short. You're not going to have that in day trading. Now, you can use a swing trading chart for that, but you're not always going to have it built in just right in front of you like you have on a daily chart. So if we come over here to my chart, I'm just going to talk about these support levels. This is NVIDIA. This is where our member of the community caught this thing. What was he looking at here? He was looking at, number one, the trend. The trend is everything. I don't care what chart we're talking about. I don't care if we're talking about swing trading, long-term trading, or day trading. The trend is everything. So if you have the trend with you, then you go on to the next thing. You go on to your volume. Did we have good volume over the last couple of weeks on NVIDIA? Absolutely, we did. Then it was just a matter of finding buy signals, engulfing candlesticks, and this thing went for a heck of a run. Now, when we talk about resistance points, I'm looking at this right now saying this is my exit point. If I were in NVIDIA right now, this would be my exit point. Why? Because if we come over here, we just see a lot of consolidation here, even dating back to June. The consolidation is happening right now, and more so than that, you have this ugly face pattern. And I said earlier, you don't really need to focus on patterns, but you can still see them. They can still give you indications of when you can exit a stock, and that's exactly what we have here on NVIDIA. So the big thing about this, of what I'm trying to drive home, it tells you right here, you should exit. You should exit. This is not going to be that easy to see when you're doing something like a day trading. Now, people always say, Mo, how do you find stocks? And this is actually a really good one. Finding stocks is really not that difficult. My favorite way, and the way I've been doing it for years and years and years, has been going to Yahoo Finance. And that sounds so basic, but it's a great place to go. All you do is come up here to markets, and you go to whatever you're looking for. For me, it's most actives, gainers, and losers. Those are my favorite. If you're looking for ETFs, go for ETFs. If you're looking for futures, go for futures. But if you want to look at options, highest open interest. But I always click on most actives. So if I'm looking at most actives, it gives me a list of 25 right here, 1 through 25. And these are your stocks that have the most volume traded during the day. And funny enough, you can see NVIDIA is up here with 275 million shares traded today. The average volume is 370.3 million shares. So what do? I actually come here and I copy all of these. And I take these 25 and I'll put them in an Excel spreadsheet or something. And then I'll come back the next day. So I'll come back on Friday and I'd pull up this same list and write them down again. And then I'd come back on Monday and I'd do the same thing, Tuesday, Wednesday, Thursday. And I typically will do like somewhere 5 to 7 trading days. And I just want to see how consistently these companies are in the top volume of the market. I'm willing to bet that you're going to see a lot of NVIDIA in there, a lot of Tesla, Lucid, Intel, Palantir, AMD. You're going to see a lot of these over and over and over again. That's how I would start to pick stocks. Not saying that you need to take the top 10 or the top 15, but narrow it down. Start with those and then whittle it down. And eventually you'll end up with what I recommend, 5 stocks. Trade those 5 stocks over and over again. Now, if you're a person that likes to fluctuate a little bit, go to the trending tickers. You can come in your trending tickers and you can see what's going on. Peloton, for example, is up 37% today. Zoom is up 13%. All of these different companies are trending on different days. You're not going to see Peloton up 37% every day, but you can go and trade Peloton if you wanted to today. To me, that's not ideal for swing trading. That's more of a day trading pattern. So I like to stick with most actives. The gainers. This is another one where I more recommend this one for your day traders, but you can certainly find stocks that are in here on a repeated basis. And it does the same thing. It tells you the biggest gain stocks of the day. Here's the biggest loser stocks of the day. One way this is exactly how I find. If you look at my list right now, I'm going to come over here. These are 5 stocks that I'm looking at right now. The community that I have in my Patreon community is where I found all of these, from the first one, which is Micron, to Moderna, to Netflix, to FedEx, to Disney. They all came from my community. You can run screeners here. You can run a stock screener on here if you wanted to on TradingView. You can run them on Yahoo Finance. They have them for you. You can come over here and click on screeners and do equity screeners. But I like going to my community. Why? It's not so much the stocks that I can come in here and see what the biggest gainers are today, see what's most active. But the community is going to be the one to tell me, hey, Mo, look at this stochastic. Look at this trend. It's coming through the sweet spot. It's leading up to the sweet spot. That's way more important to me than something that has a lot of activity that day. Because tomorrow, the activity might not be there, but the trend will more likely than not be there for multiple days in a row. So the community for me is a very, very great place to find stocks. And right now, like I said, it's these 5 right here. I am all about these 5 right now. And I'm constantly throwing things in and out depending on the live streams that we're doing and the information that people are feeding each other. So when we do swing trading setup, we're not talking specifically about the chart setup, right? I'm just gonna talk about what's on my chart and what I look for. So at this point, you're probably asking, okay, how do we execute a swing trade? What exactly does it look like? I'm gonna bring you over here to this NVIDIA trade because it is such a nice setup. When I start looking through, actually, let me pull up my watch list here. When I start looking through stocks, start looking at the top with Apple. Apple. All right, I'm looking down here. I'm always looking down here at my trend, okay? So I am looking for something that is in this area, actually, moving through this sweet spot, okay? Moving through that sweet spot, up or down. So I'm just gonna start clicking, Airbnb. So we're in there, but we're not. I wanna catch something on the bottom. I'm probably not gonna find a lot going on. Here's one. So this is American Electric Power. So this is an interesting one. I will look right here and say, okay, we're coming through the sweet spot pretty nicely, but the volume is rather low and decelerating. Therefore, I'm just gonna move on. So I just clicked through here, and this is the best way of going about this. See, here's AMD. This one might not be bad. AMD is not right now, but it's starting. So maybe if we can get the red and yellow into the sweet spot coming down, obviously this would be a short. If we can get an engulfing candlestick like that tomorrow or something, maybe this is a potential short that I could take. So what is my point in telling you this? I look at the trend first. The trend is the most important thing. If I don't have the trend, nothing else matters. Volume doesn't matter. Engulfing candlesticks don't matter. Nothing matters if the trend isn't setting up. So for me, I look at that trend, and that's the number one way. I just start flipping through stocks and seeing what's there. Now with NVIDIA, let's pretend that none of this was here because we want to go back in here. And yes, this is Monday morning quarterbacking it, but this is how you learn. You learn from good examples, not bad examples. This would not be a good example here. This is a disaster. You should not be swing trading if something is looking like that. If something is looking like this, that's a lot better. If something's looking like this, that's a lot better. But this is an absolute disaster on a swing trading chart. You want to have good swing trades that move through the sweet spot up and down like this. You do not want anything consolidating up here or consolidating down here. That's where volatility comes in and just crushes you. So we came through the sweet spot here. Next thing we're looking at is volume. Do we have good, consistent volume? And the answer is yes. If you look over this last 2-week period, we were consistently up here at this yellow average line. So 2 for 2. Our trend is there, our volume is there. Then what do? We look over here and we're just going to assume that we had our bid-ask spread being correct. It was at 0, or not 0, it was at 1 or 2 cents, as close to 0 as possible. We don't want to see this thing being 50 cents, anything like that. I do have many videos out there that are on the bid-ask spread. It is very, very important. You do not want something that's like 50 cents. You want something that's like 1 or 2 cents, and that's what we're going to assume happened. Number 3, any resistance. That's where we look for our engulfing candlestick. So this was running right here. This was stuck here right at the 100-day moving average for multiple days. All of a sudden, boom, this was an engulfing candlestick during the day. You had the trend there. You had the volume there. Boom, you execute your trade. Now, where does your exit come along? Well, we did get hung up here at the 25, got hung up here at the 50, but it wasn't for long. They kind of blasted right through there. Why? Because the volume was there. The volume was there and the trend continued. If the volume is with your trend, you are going to do very well. And that's exactly what you see here with NVIDIA. Then the exit point comes in saying, go back to the beginning of the video, this consolidation right here. It is the consolidation that you can see. It's the consolidation that calls for an exit of NVIDIA. And that is a very, very, very nice gain in a 5, 6, 7 day period on a very volatile stock that leads the market like NVIDIA. So as you can see with swing trading, how to enter and exit is incredibly important. Go watch this next video that I made about it. You're absolutely going to love it. Have a great day.